Alright, this is the MTPredictor weekly update for August 7th. I've got a chart of the daily Dow up. We'll start here. You can see the blue line here is our 200-day moving average. You see the pattern. We've been tracking this as we do each week, the daily Dow, and we hit wave 5 up right here in this kind of orangish area of resistance as we go on wave 4 into wave 5. Typically after wave 5 we get a correction back to the wave 4 DP, which we did, and then they took that area out. You see the blue buyers bar here in the DP area. That got taken out. They traded below that. It's kind of like what we call a DP continuation trade, continuing the trend. And we'll take a look at the weekly ES so you can get an idea why it's done this. Just purely from a technical standpoint, even if you don't even watch the news, they breached the 200-day, got a close below that. That got taken out. We had some more DP support here off the wave 2 area. That got taken out into this DP here. Did get a high volume spike, which is a potential sign that buyers are stepping in. The problem is the next day we did get a much lower low into this DP support. So although we do have a blue buyers bar here, it may not necessarily confirm that buyers are stepping in, that professional buying is stepping in here. So we'll have to watch that. Let's take a look at the weekly ES. So again, the weekly ES, let's just kind of go back a bit. On the weekly ES, we went wave 5 up into our decision point resistance off the wave 3 here, and this kind of, again, orange area is our minimum wave 5 resistance. We got an automatic DP sell signal, the target of which was the DP off the wave 4. So again, very much like the Dow went wave 5 up on the weekly S&P, and you can see how that unfolded here. Now in this area we got this swing back up here. If I put the Elliott wave analysis on this, I'm going to choose this swing high here. It put us in this wave 2 or B. Well, how do I know if this is wave 2 or B? Well, because we had a significant resistance here, wave 5 up into major DP resistance, we look at this as this impulse move down here as wave 1, and we're going to call this wave 2 instead of wave B into wave C. We're looking at wave 2 into wave 3. So as you remember last week, or a couple weeks ago, I had projected the wave 3 down because we had this, what we call our holy grail trade set up. Wave 2, instead of looking for a correction back to the wave 4 DP, we're actually playing for wave 3 down, or looking for wave C down. We're looking for wave 3 down. It's a bigger target, so it's a low risk, high reward potential scenario, as wave 2 into wave 3 tends to be the largest wave. You know, here's wave 2 into wave 3, the largest wave. You can see here was wave 1, much smaller. Wave 2 into 3, very large. 3 into 4 is small. 4 into 5, smaller than the wave 3. So it's a low risk, high reward potential trade setup. And this is exactly what we found. We came down just about into the typical wave 3 target there, just a few ticks away. So we'll have to watch this now. We're in that daily support that we saw in the Dow. We had that high volume spike, but again, not sure yet if that is buyers stepping in because we got a new low on Friday. But we did go wave 3 down here. Here's the typical wave. Maximum wave 3 would put us all the way down to 1067, 1068. You know, quite a ways away from there, but you can see how quickly the market can move in a week, how many points it can chew up in a week. So keep an eye on that. We could project the wave 4 up at this point, see where that resistance will come in. Let's just take a look at up wave 4. Okay. So here's our wave 4 resistance. If we bounce here and retrace into this wave 4, this would be another area to watch out for a drop if it does come into this area into wave 5 down. And if it does come into this area, we'll project the wave 5 down at that time. So not out of the woods for downside. You know, the S&P downgraded U.S. debt on Friday from AAA to AA, I guess, and we'll see what the ramifications of that when the market opens. In fact, we can take a look at the 15-minute, 24-hour charts here. You see the markets did open, the futures have opened anyway, and this little gap down. Now this is the S&P. This is an inside gap down on the 15-minute, 24-hour chart, S&P mini future. The support is here. That will start on the S&P around 1157, all the way down. The bottom of the support's around 1150. So in this area, we'll see if they do sell off, come down into this area of support. It's an inside gap. The tendency is on these that they will fill, but it may not fill until we actually sell off into some major support, and then later on fill the gap. I'm not saying this is going to happen tomorrow because we may lose ground tomorrow into the support area, but not necessarily fill the gap because this is a bigger time frame, and it may take a while for that to play out. And that, again, that's just a tendency. It's not a guarantee. This is just a tendency that these gaps have. Inside gaps tend to fill. Outside gaps, if they can't fill in the first half hour trading or so on the futures, tendency is that the market continues in those direction of the gaps. Alright, so that's where the market is currently opened. We had this little gap down from Friday's close, but it was not below the low on Friday. Right, so we'll see if they fill that. It may have to come into some major support in order to fill that gap. I don't know necessarily that it's going to do it from here. You can probably draw a trend line tonight, and if it breaks that trend line, we'll probably end up in this area here. All right, let's then take a look. We did our S&P. Oh, let's take a look at Goldman. We want to keep an eye on Goldman Sachs here. And you see, we have our major support in Goldman, and you see it's come into that support. We got a blue buyer's bar here, so they did hit that support and rally a bit on Friday. But this is the area, like I said, if they take this DP out to the downside, then chances are we're going to see, we could get maybe if we got a 10% correction in the S&P at this point, maybe add another 10% to that, or worse. All right, the BKX, the banking index, you had this kind of little head and shoulders type pattern where you had the peak here, and it broke the basically broke the neckline, or closed below it. I won't say it broke it. It closed below it last week. You can see the close there at this point. If this gets taken out, the low there at 40.76. If that gets taken out, then we could see the target in this area. We'll call it 25.50 area or so. And that would give us more downside in the S&P, the Dow, and so forth that we're talking about. If this area holds, if they don't take that out, and again, Goldman doesn't take out its support, then the market, we should get some type of rally, at least up into that wave 4 area. So again, just areas to watch. And let's check out our metals and our oil and dollar. Now we'll start with gold. Again, gold went on to new all-time highs into wave. We're still in our wave 5 minimum wave 5 resistance here. Here's your typical wave 5. We did get some selling. It may be people selling what has made them money to pay for those assets and margin on assets that they're losing money on. The STF is strong in here. It did come a few days ago. We did start seeing some strength in the STF, and so it's possible there's more upside ahead. We'll just have to see if this is peaking out or not. And again, that around that 1720 area again is the beginning of the next resistance level in the typical wave 5 resistance. Again, if we get a correction anywhere from the wave 5, we'll be back to the wave 4 DP. Again, this is the major wave, so that would be right around the 200-day moving average, which again, if you're a long-term accumulator of gold or silver, this would be an area 2 to 10 year time horizon. Let's say this may be an area to pick up some more, as we've seen again and again, below the 50-day, which is the red line, above the 200-day in a bull market in gold. These are good buying opportunities. As you can see, MTPredictor has picked out some very good ones, as this one came well below the 50-day but just above the 200-day, and that turned out to be a fantastic trade. Alright, so again, I do this almost every week because a lot of people that are coming are new to the videos, but you can see those are fantastic buying opportunities. This chart just goes back to 2009, and you can see how many of those. So if we do sell off wave 5 into the wave 4 DP, and we'll be below the 50-day and maybe just above the 200-day, again, another good potential buying opportunity for those with a long-term who are exchanging cash for hard money, or hard assets. Alright, let's take a look at silver, and again, you can use that gold chart to time your purchases for silver as well, because silver is much more volatile and it won't respect that 200-day moving average like gold does. But silver, I put the major waves on this week. We had wave 5 up. We corrected here, and then we've retraced up a bit here into this wave 2 or B. Again, this could be, this was a major high here. This tested the all-time high in silver back here, and so we could actually project wave 3 down in silver. That is a possibility if they don't take out the wave 2 resistance area. Okay. Alright, so you've got some support here, around the $30 to $31 area. You've got some more support DP off the wave 4, which would put you back in silver around 23.50, or at least starting at 23.50 down to $20, and then the typical wave 3 support to the downside is around $18, $19 in that area. So that's a potential, because we're at this resistance. If they can't take this out, then we're headed further south there. Now if they can take this area out, here's your next level of resistance, which would be a new all-time high in silver, just almost about $52. And then if they take this out, we could really see some upside in the silver market. They take out that $50 area. So we'll see how this goes. Nothing, goes up in a straight line. Everything will pull back at some point. Oil. The nice thing about silver and gold is it's one of the last things that you can actually own outright. People say, well, you can own your house, but don't pay your mortgage and find out if you really own your house. If you have your mortgage paid off, don't pay your real estate taxes and see if you still own your house. If you pay your real estate taxes but you haven't paid your homeowner's dues, see if you really own your house. There was someone who had won the lottery and bought $1 million house. Years later, they didn't pay their homeowner's dues and they were foreclosed on. So, you own gold and silver. You own it outright. It's one of the few things that you can own outright today. So, just another interesting aspect of the metals. This is oil. Again, remember we had our long in oil that shifted to the short side. It turned out to be an excellent trade there as oil has come down. It hit the target there. If you were actually trading this one and you had moved your stop to your entry, you may have taken a break-even trade on that, but ultimately we did get to the target as expected there. We've gone to the DP, went through it, and closed right inside the DP support off the this swing low here. So we could see we don't have particular strength yet in the STF, but we'll watch that. If it does get into the gray band here, it will tell us that maybe more downside ahead. But at this point, your next support would be the typical wave 3 support area that comes in around 79, I'll call it 79.30. And we can actually project up now wave 4. Okay, your next resistance, if we do get a rally again in oil, will begin in the 89.70 area. Will be your next resistance. At least it will begin there. You see it goes all the way above 93. 93.80. So that will be your next resistance if we do find support here and move higher in oil. And then finally, we'll look at the dollar. We did get that initial pop in the dollar on the debt deal, and then it did reverse and sell off again. Here's our next major support. Again, we had major support back here. They haven't been able to test that yet. It's been kind of holding in this pattern here. But if they do take this out, again, that's not good news for the dollar. Our resistance areas you can see next here. If they do come up, if they are able to kind of break out of this channel, you're gonna have some more resistance around 77.12 area. All right, so we'll wrap it up there. I went a little long, a lot of markets to cover, a lot of stuff going on here. And we'll see. I think we've had our downgrade. Focus is probably going to be again on Europe and all that's happening over there. The crisis, the debt crisis there. Again, this is kind of a worldwide thing. As you see, it's spreading. It shouldn't be a surprise. We're on a fiat-based money system around the world. Everything's mostly backed by the U.S. dollar. And as people find other either currencies to deal in and try to get away from the dollar, obviously that affects our U.S. dollar negatively, pushing it down further. The other thing to keep an eye on this week is for traders is the Fed announcement on interest rates beginning on Tuesday, and then Wednesday is the announcement, I believe. So that's another big event intraday and beyond. Alright, so we'll wrap it up there and we'll take a look at things again next week. Hope you have a good trading week and have a great rest of your weekend.